Welcome to the Financial Flossing podcast with Ross Brannon, guiding dental professionals to a brighter future. Ross Brannon is a financial advisor who knows it's not just about your teeth. He helps dental practice owners protect and maximize today's cash flow to plan for tomorrow's cash needs. Find him at rossbrannon.com. On the show, he brings together experts to help dental professionals looking to make smart money decisions to grow their income, turn their retirement goals into reality, and improve their lives. And now, here's your host, Ross Brannon.
Welcome to the show. Today we have two doctors, Dr. Deren Flescher and Dr. Chris Green. Deren from Oklahoma City, Oklahoma, and Chris from Denver, Colorado. These are two doctors who have recently sold their practices, but not just to sell and retire, but to go down a different road of entrepreneurial curiosity and help dentists in ways they have seen dentists be taken advantage of. Chris and Deren, welcome to the show.
Hey, thanks, Ross.
Hey, Ross. How are you, bud?
Good. Well, congratulations on your sale. I know a lot of people work a long time to do that. So kudos to you for building a business and not owning a job, as I always talk about. And so I know it's relatively recent since you sold. How does it feel?
Deren, take it away. Oh, it's good. It's it hasn't settled in yet, to be honest, but feels like it was the right timing in the evolution of this business and some of the other interests and kind of the time in the market as well. But time will tell. And
you guys, you did it pretty quickly. Both you guys, I think, Chris, you owned your practice. Both of you guys did startups, if I recall. And Chris, you owned your practice for 6 years. Is that right?
5 years.
5 years. And Deren, how long did you own your practice for?
It would be 8 in just a few months, so 7.5. Yeah,
so that's fantastic. Some people work their whole career and don't have anything to sell. So good job for you. And what would you say the key for you guys building a practice that was sellable? What was the key for you guys?
I can speak to that.
Yeah, go for it.
For me, I mean, honestly, even before I opened, I knew this is where we would end up. From the size of the office, having enough operatories to have multiple doctors, the name of the office, not being my last name, all that stuff was really geared from day one to make sure that I left that door open to be able to sell one day. And then, with COVID and all that, 3 years ago, really just kind of fast forwarded the process on plugging in an associate and stepping out, when you couldn't really be there all the time. So it kind of forced me to create systems and strategies and all that to make sure that I essentially operated outside of me. And we just kind of put our foot on the gas and got to what ended up being the finish line here with the sale quickly. So, yeah.
Both of you guys did a really good job of getting out of the chair as fast as you could to create a business. Talk real quick about how hard that was.
Yeah, you definitely have to have a plan in place. And I know Deren certainly did, but a lot of people struggle to escape the chair, or at least even cut down from 4 days clinical to 2 days. I think it's a lot to do with mindset and then trust in yourself. So you kind of got to trust that it's going to work out, but also, you got to put numbers to it as well. Like you have to have the patient flow. You have to have the number of operatories, put a good schedule together, enough hygienists, things like that. I think the biggest thing is patient flow to feed an associate. You never want to bring somebody in to just sit around, and then training up like a leadership team, around you so that everything doesn't come back to you. Because we talk a lot about kind of growth and scaling dental practices, and every couple employees you have, systems start to break in the practice and you have to revamp things. And so you have to be really good at maneuvering and pivoting and pushing forward to kind of do it the way that we chose to do it.
For me, it's always kind of hinged on making sure that this wasn't the only thing that made me money, whether it was related kind of side gigs in dentistry or investments, other active businesses or passive income. when dentistry becomes optional, it becomes a lot easier and a lot more fun to make sure that you put yourself in a position to be able to make those moves and grow. It's scarier when you don't have those options to fall back on. So that's kind of, I know we want to talk about that here shortly, but that's kind of what we want to help people do for themselves too, is replace your own active income to where if you still want to do dentistry, you can, but now it's on your own terms. You don't have to retire. You don't have to do nothing, but you can have more fun with it and kind of do the dentistry you want to do.
Well, I am on record, and I will continue to be on record on not believing in retirement. But that I'm not here to project my convictions on people. But as two people who just sold, you're both young, so you're not playing the baby boomer game of like, I want to play golf and I want to retire. Neither one of you have that in your blood to do that in your desire. You guys are obviously continuing to practice dentistry, but you're also going down a different entrepreneurial path from dentistry in some respects. And you created a group called Legacy Point. So talk a little bit about what is Legacy Point? Why did you decide to start it? Who are you helping? How are you helping them? All those sort of things.
Yeah. Legacy Point, Deren and I had been talking about, kind of the things we were doing to create passive income outside of the dental practice. And a lot of these alternative investments have become, in the circles we run in, it has become popular. But
let's stop real quick there. Let me interrupt you. When you use the word alternative investments, some people may not know what that is. So I'm going to define it as,
yes,
we're not talking about traditional stocks, bonds, mutual funds, ETFs, life insurance, annuities. We're not talking about those things. These are, you're speaking of private market deals that are still securities, but they are private market deals that go through a different ecosystem than the typical Edward Jones, Merrill Lynch, RIA type individual.
Correct. That's the definition. For high net worth individuals that are accredited investors, you start to look for other ways to invest, mitigate taxes, grow, create cash flow outside of just the traditional, 401ks or brokerage firms. So we've kind of gone along that route, and it's worked out really well. So we have access to best-in-class alternative investments, and depending on what you're trying to accomplish, like I said, either cash flow, tax mitigation, or growth, there's different types of tools that we can use to help with all those scenarios.
Well, here's what I've seen. I work with a lot of dentists, and I would argue more often than not, the highest rate of return a dentist is going to receive is investing in their practice. You guys would likely agree with me on that. Now, the value of your business, your practices that you just sold, didn't trade on a ticker symbol with volatility up and down every day as the market went up and down. And you had a high rate of return, but it wasn't liquid either. And so what I typically find is when someone realizes there is an option for something that doesn't have volatility and isn't liquid and may or may not be able to produce a good rate of return or a reasonable rate of return based on what someone wants, they tend to be somewhat interested in that versus the stock market. And by no means am I saying the stock market is bad. I do not think the stock market is bad. I personally have money in the stock market. I'm sure you guys do as well. But what I'm hearing you say, and I'm putting words in your mouth, so tell me if I'm right, is there are other ways to create wealth that not a lot of people know about it, but it's a little more treacherous if you don't have the right people on your team and know how to access these markets the right way. Is that right?
Yeah, 100%.
That's well said.
Yeah. That's kind of, going back to kind of the origin story here of what we're doing with Legacy Point. Chris and I have done this for a while now, several years, and we've seen some of those offerings not be with the right people or with the right sponsors and go through the right processes. And we wanted to make sure that we did that for our members. And so kind of through our own mostly good times, but also trials and tribulations. We've figured out kind of, what we should be able to offer to people and what they need to know and learn to be able to really, be good stewards of their money so that they can eventually step out of the chair when it's time to do that. So we want to help people do that.
You've seen people, Deren, you've got friends, and both of you have friends who have lost money in deals that looked good on the surface, but once you lifted up the hood, they were unscrupulous. Is that fair? Is that accurate?
Yeah, absolutely. Yeah, there's been a couple of those that have happened semi-recently. So it's really unfortunate, but that can be the case here. And that's something we want to, make sure that we give people the knowledge, not just give them deals and have them trust us, but really learn to trust themselves and their own skill sets and being able to do their own due diligence on top of the heavy due diligence that's been done ahead of time as well.
We'll talk about that, because most people, they're going to hear something like this and like, oh, that's risky. That's gambling. And in some respects, if you're dealing with the stuff that your friends were dealing with, you're talking about, that is very much the case. But how do you mitigate the risk and the potential of being ripped off in these types of scenarios?
Well, the key is that these deals are carefully vetted and curated, and the due diligence that's done on them is done the right way. And, so we all know, we all have access to unique, the guys on this call, I should say, we have access through Legacy Point to deals that have followed the 3-step due diligence process. Is the sponsor somebody that we could trust? Have they been a criminal in the past? Have they been, audited, or, has the SEC had their eye on them? All these things. Is the deal, is the deal level opinion, right? Is the deal going to do what they say it's going to do? So it's checked out in the back end and crunch the numbers and stress test it and make sure that that's going to work. And then if there's any tax advantages of the deal, does this stand up to the IRS code? So we stress test on that level. And Ross, you talk about those three-pronged due diligence approach a lot. So I'd love for you to add to that, but that's really absolutely critical. And there's other people that have promised due diligence and that it wasn't sophisticated enough. So that's where the bad actors have snuck in. So we're trying to create a walled garden with our community.
Well, I've experienced a lot of the bad stuff. I've seen the bad stuff, and I've learned, what to look for and what not to look for. And to your point, you want due diligence where they make sure, like if, you want to make sure the sponsor, the person raising capital, has the requisite experience. Have they done before what they say they're going to do? And then, like you said, a financial background check. Is this guy filed bankruptcy last year? Is he up against the wall right now? Is he in debt up to his eyeballs? And then a criminal background check. There was recently a Ponzi scheme that was just shut down within the last 60 days, where the head of the Ponzi scheme was in jail for running a Ponzi scheme, but had his sentence commuted about 4 or 5 years ago. And so he got out and did the same thing again. As one friend of mine says, the tiger doesn't change his stripes. And so, so there was no due diligence in a situation like that. And then if there's tax, well, then you have a third party underwriter make sure the numbers being presented are reasonable and within expectations are real. And then get a third party tax opinion from a reputable law firm if there's tax benefits. And, I want to go back to this because so many people are going to say this isn't real. And so if you guys would speak to this, there's a lot of people out there who have only done the traditional liquid markets, stocks, bonds, mutual funds we talked about. And like I said, there's nothing wrong with that. There's no one. You're not saying with your group that you should not do stocks and bonds, and you're not saying you shouldn't do all alternative investments. So speak to a little bit about the argument of one versus the other, because that's not the argument you're making, but that's the argument someone's going to project onto you when they have skepticism.
Yeah, you kind of touched on it a little bit with your illiquidity and consistency in the offering and the return. Part of what we offer here on top of everything we just talked about with making sure it's the right opportunity is kind of non-correlated options. If you don't want to be on that roller coaster of the market, or be less on that roller coaster over time through your allocations, you can do that with opportunities like these, whether it's real estate, oil and gas. We got lots of options where we can make sure that you've got solid, if not better returns than you could get, over time on average with the market, but also they're not going to be affected by the news story of the day or, the war overseas or all that kind of stuff. You got less volatility in what we're doing because it's, real businesses doing, real business and the returns are related to that thing versus, the whims of the news or the news cycle or whatever. So I hope that answered a little bit. I don't remember the rest of your question.
Well, I think one thing people need to be aware of is there is an illiquidity premium in private investments. So whatever your typical rate of return in the liquid markets is, everyone's going to vary in their response. You will get a higher return typically in an illiquid investment. So that's, for some reason, people is a compelling reason to do this. But what we're saying is you're not suggesting if someone has $5 million in stock market portfolio, you're not suggesting liquidate that and put it all in alternative investments. And because you guys are talking about diversifying across numerous asset classes, by no means are you saying you should get out of the stock market because you guys have money in the stock market and you just don't have all of your money in the stock market. And I think, like we were saying before, if you have alternative investments, you could easily argue that you might probably want or need a higher liquidity position. Would you agree?
Yeah, that's my philosophy exactly. Like the stock market, you could diversify within the stock market, but you could also diversify outside of it. And we talk a lot about like investment buckets, so the stock market could be a bucket. You might have a bucket of money you put in alternatives. You might have a bucket of, just cash or something more fixed. And then you might have, a bucket of your attention is on real hard assets, real estate you own or a business you own. So when we start to look like this, we're even diversifying more and kind of hedging ourselves against ups and downs from the stock market and in the economy. So yeah, that's the approach I've chosen for myself. And I think it's proving to be a sound approach moving forward.
Well, one thing that's I think is really intriguing is reducing taxes legally. And so you guys, through your group, offer solutions to help your members legally reduce their taxes. And so, we don't want to get into specifics of like strategies here, we don't want to play around the compliance world in that regard, but talk about some examples of what you guys are doing to legally reduce taxes. And I want to clarify for anyone who's pretty tax savvy, these are not conservation easements. These are not listed transactions with the IRS. These are legitimate strategies within the code that works in all 50 states. So even California and New York, which tend to be a little harder to do stuff in, talk a little about what you guys are doing to help people save taxes, because I would argue, I'm on record saying the highest rate of return you'll ever get is $1 taken back from the IRS. Now, I haven't gotten my spreadsheet out and modeled that out. I'm sure some engineer somewhere will challenge me on that, and that's fine. But that's my opinion. So kind of tell me what you guys are doing.
Well, I want to zoom out just a little bit and kind of go back to the whole like market versus private stuff. In the same way, we're pretty agnostic to how people save their money too. Like we're going to talk about 401ks and IRAs and all that. Like we want people to optimize how they do this. And then this is really for people who go above and beyond what you learn about on the news, on the mainstream news. Like what can you do if you are a really high income earner, in that top tax bracket, that top marginal tax bracket? What can you do with that money? And that's where we want to come in.
That's a really good point, because you should be doing IRAs, 401ks, paying your kids. Maybe you do the Augusta rule. Maybe you do some income shifting among entities. Some people are C corporations. I've talked to some people who are C corporations doing that. And so, but typically up to about $1 million, maybe you do a cash balance plan. After $1 million of income, those things don't move the needle too much. And so that's where some of the stuff you guys talk about. But some of the stuff you guys talk about also works on lower income people. And by lower income, I mean sub 1 million, But so let's talk about let's talk generically, not specifically, the fruit you're seeing from some of the legal tax strategies you guys are implementing with your members.
I mean, without getting into any specific investment, just saying, if you are in a top marginal tax bracket, and for easy math, you're paying 40% tax. 40% in taxes. Yeah. So you're paying 40% in taxes. If you can, assuming you've got cash flow needs that are not as high as what you're making, you've got deployable income. If you can put $1 into any investment and it saves you, it lowers your taxable income by that dollar or by 80 cents on the dollar, you've saved 40% of that invested money. So for this illustration, if you save $1 that you put in, you would save 40 cents in taxes on that dollar immediately. That's your return day one. So,
let me ask you that. This isn't just, so let's use the conservation easement, where a conservation easement, there was no underlying economic business. It was put $1 in, get a $5 deduction. In your example, you're putting $1 in, you're getting an 80 cent to $1 deduction, but what's happening after that?
Right.
That's for a business that's operating.
Yeah. So the operating business, then you're getting quarterly distributions. And for the particular investment that we're all referring to, I've been seeing, I think, 20% plus returns each, over annualized.
Of course, someone hears 20% returns and they're going to say, oh my gosh, that's not possible. And you've heard this before. So what do you say to someone who's a skeptic?
Well, now I've seen it work. I could show members of the group exactly, where my dollars went and where they came in from this. And so you say, I like the $100,000 example. So let's say what Deren referred to, you invest $100,000 immediately day one, you've saved $40,000 from paying Uncle Sam. So we have $60,000 more that we need to make to break even on that $100,000, and then everything else is gravy. So within 2 years, on this particular investment, which has been in the tax code for how many years? 60, 70 years? It's
close to 100, if not more.
Close to 100 years. So it's not shady. It's not one of these gray areas that your accountant's going to question. It's been there forever. But anyway, within 2 years, I've pretty much broke even on that 100, and anything else that comes back is just gravy. And there was, otherwise it's what, 40 grand out the door, right? For every 100 in the example we're speaking of.
And one thing you said is you guys actually have conversations. You bring in your strategic partners to have conversations with someone's CPA to really vet you guys out and vouch and poke holes in what you're doing. Am I right?
Yep.
So tell me this. So you guys are you're basically, I'm going to put words in your mouth, tell me if I'm wrong or right. You're going out, you're finding kind of who you guys are describing as trusted strategic partners who are experts in this industry and are helping you guys provide the solutions to the tax problems or the investments, and then kind of helping after they've vetted them, then you vet them yourself. So there's like a multi-layer due diligence process in this regard, and bringing this to your ecosystem to help clients save money on taxes, get a higher rate of return, and then also create an education component where the old adage, don't give a man a fish, teach a man to fish, if you will. So, heaven forbid you get hit by a bus one day, they're not out of luck. They can now do this. Am I saying this the right way?
Yeah, I mean, I think that's kind of where our strength lies, is that Chris and I don't claim to be experts at this. We are just a few steps ahead of most of our members, and that is our strength, in that we it's recent enough that we understand what you need to know. We remember where we came from and where we were just, a couple years ago. So our ability to kind of relate to where people are coming in at and make sure that they get it and get to where we are sooner than later. And then obviously outsourced and get higher level options for the actual part that people want to get to, which is how do you deploy this knowledge and capital and make it work for you. So rather than trying to be all of that and go get licensure and all the things that, some groups might do, we have decided to stick to what we are good at, which is bring community together, bring the education, be kind of a peer group, and then bring in the right people to do the part that they're really good at too.
And surrounding myself with other like-minded individuals that are excelling in their profession. I mean, that's how we grew our dental practices. And we think this is a great way to put all of our heads together and, protect our financial future and do it the right way. But yeah, vetting out and having these relationships is the key to the group, right? It's the key to what people that are interested in creating these types of solutions for their, with their liquidity. That's the availability to those deals is the key.
And this came out of, I don't want to go down too far on this road. This came out of, quite frankly, a negative experience both of you had. Am I correct in saying that?
A little bit. It's mostly positive. Obviously, we wouldn't have probably pursued this path at all if all we saw was negative. Like, we saw that there were positives in what we were doing, both privately and with other groups that we'd been involved with. I've done local deals and private deals and then gone to higher level, kind of mastermind type groups like what we're building. And there's good stuff there. And what Chris talked about is the really good stuff was really the power of the group. And we've seen that both in other groups like this, but also in our own dental mastermind type groups, where eventually the leaders of the group really aren't leading the conversation anymore. Like, the members become super powerful in their ability to kind of vet and support and sift through this stuff together. So yeah, we did have some negative experiences, which led us to doing our own thing. But I think overall, this is a very positive, a positive outcome as far as what we saw possible here.
So who is this a fit for? I'm assuming if you just started your practice up, this is not a fit for you. This is probably people who are more established in their practices, earning a higher income, is able to save a decent amount of money. Who would you say the avatar client or the avatar dentist this is a fit for?
Yeah, I would say somebody that, first of all, you have to be an accredited investor, which means, you have to have made $250,000 or jointly $300,000 the last 2 years.
And $1 million net worth outside of your income. Outside of your house. I'm sorry, outside of your house.
Outside your personal residence. But probably somebody who's looked at this space before and has considered this or been interested in, diversifying outside the stock market. It's probably going to be a business owner. So somebody who has an emergency fund for their business, probably 2.5x their monthly break-even point. A personal emergency fund of probably 6 months worth, because you don't want to join a group like this and then be kind of just sitting on the sidelines. You want to be ready to take action if you see something that makes sense for your situation and something you like. So you want to have some liquidity, and you probably want to have your business operating with a pretty low overhead. So those are kind of the parameters that we have, the guardrails, because we don't want to just let anybody in and take a membership fee and they can't really act on it, right? We want to see people that could come in and they could put things to work that they're learning if they so choose.
And get value out of what they're paying for.
Exactly.
So if I had to press you a little bit and say, okay, what kind of income does someone need to be making for this to really make sense? Like, now it's a no-brainer. If you're making $1 million a year, you would qualify for this group. I can understand that based on this conversation. But there's always somebody say, well, am I ready yet? I've got that. But okay, I guess the question is, how much deployable capital do they need to really get to work?
Well, kind of going to your $1 million a year. I mean, if they're living on $1 million a year, like they shouldn't be here. They need
That's a good point.
Right. So to kind of answer your question, it's kind of two hurdles they need to clear. One is, are you in that top marginal tax bracket? So are you above 350-ish? And then do you have 100, I would say probably at least 100K on top of all those things that Chris said? Do you have your emergency funds, your practice emergency fund, all that kind of stuff? Have you filled all those buckets? And then if you've got an extra $100,000 a year that you're wondering what to do with. So, if you've cleared that $350,000 income threshold, so now you're looking at 450. If you're kind of looking, how do I get my 450 back down to 350 and get out of that top bracket? That's where you probably want to learn what we've got going on here.
And, obviously just because someone's interested, I'm assuming they would have kind of like a call with you guys to find out if this is a fit or not, because it isn't a fit for everyone, I would assume, because not everything is a fit for everyone. So if someone's interested, what's that process look like? Where do they go? How does that whole thing happen?
Yeah, right now, the best way to do it, I mean, honestly, just come straight talk to me. I'll have a phone call with you or a text conversation with you. I mean, we've got a little bit more of a process. We've got assistants that will lead you through, our agreements and our monthly subscriptions and the cadence of the meetings and all that kind of stuff. But if you just want to learn more, you want to talk to me, see if this is kind of on the surface a good fit, just call me. I'll give you my phone number if you want.
Well, go ahead and give me your phone number. Well, let them know. How that...
Yeah. It's 405-808-1638.
Go ahead and say it one more time.
405-808-1638.
And so the group is called Legacy Point, correct?
Correct.
And so if someone is interested in learning more about alternative investments or reducing their taxes through alternative strategies that are 100% legal in the tax code, then you're the guys they should talk to.
We would love to have a conversation.
Fantastic. Well, I think this is a really good thing, because I think there's a need in the market based on what I've seen for something like this. It does make a lot of sense. So if this is so intriguing to you in any way, shape, or form, I would encourage you to reach out to Deren and have a conversation. And they'll be straight up with you. I've known these guys for a while. They'll be straight up with you and tell you if it's a fit for you or not. So any last comments before we go here, guys?
No, I think we covered a lot, Ross. I appreciate you having us on. And I think, the group's growing. There's a lot of interest. So we'd love to meet more people and see if this is something that makes sense.
Awesome. Well, thanks again, guys. I really appreciate you coming on.
Thank you.
Thanks, Ross.
You've been listening to the Financial Flossing Podcast with Ross Brannon.
This has been another episode of Financial Flossing with Ross Brannon, guiding dental professionals to a brighter future. If you liked what you heard, consider subscribing wherever you listen to podcasts. For more on Ross Brannon, visit rossbrannon.com.
Ross Brannon is a registered representative, Coastal Equities, Inc., and investment advisory representative, Coastal Investment Advisors, Inc. Investment advisory services are offered through Coastal Investment Advisors, Inc., and securities are offered through Coastal Equities, Inc. Member FINRA, SIPC, 1201 North Orange Street, Suite 729, Wilmington, Delaware, 19801.